credit union friends. Welcome to this episode of Three Questions. I'm Greg Michlig, President and CEO at CUInsight.com, and it's great to be joined by Jim Holt, Chief Development Officer at Student Choice. Jim, thanks for being here.
Hey, it's great to be here, Greg. Thank you very much. Appreciate the opportunity.
Absolutely. It was good seeing you recently at the NACUSO
Yeah,
conference.
yeah, it was fun.
It is, and I know our audience is looking forward to hearing your insights here. So let's jump into our three questions.
Yep, you got it.
All right. So when it comes to the business of higher education finance, what are the key takeaways from the new OBBB law that was enacted last year?
Yeah, I keep having some issues. Did I do two Bs or three Bs or four Bs? Yeah, I will say this law makes some significant and sweeping changes to how you pay for an undergraduate, graduate, and professional degree. I'll start with the first big change, Greg, and that is the PLUS loan. So this law introduces a PLUS loan that will be capped. So let me start first by explaining what is the PLUS loan. So PLUS loan is the parent loan for undergraduate students, right? And it started in 1980. And this is when Congress said, you know what? We want to, develop a program to help families better afford a college degree for their dependent sons and daughters. So they created this PLUS loan. They put a $3,000 cap on it, but it allows parents to borrow up to $3,000 to help pay for their son or daughter's education. That stood until 92. So in 1992, they removed the cap. So now parents could borrow up to the full cost of attendance, less other aid received, right? Today, or starting July 1st, what this law does is it puts back a cap. And the cap that they're imposing, the $20,000 a year, 65,000 for a dependent over all of the academic years, is very similar to kind of where we started in 1980. So if you take a look at that 3,000 and 1980 dollars, if you move that up to today's dollars, it's probably around 14, 15 grand. So a little bit less than 20,000, but it basically imposes that cap back on. So that's number one. Number two, and probably the biggest change that this law makes, is on the Grad Plus loan. So the Grad Plus loan is very similar to the Plus, but it's for graduate and professional students. So in 2006, Congress said, hey, the Plus loan is pretty cool. Let's introduce the same thing to help graduate and professional students. So they did. So now a graduate professional student can borrow up to the full cost of attendance, less other aid received, to help pay for the graduate professional coursework. Now, this law eliminates the Grad Plus. That is huge, right? So now it does it through a phase out period, right? So over the next 3 years, it's going to be phased out. So if you are an existing graduate student today that has used a Grad Plus previously, you can still use a Grad Plus going forward until your program completes, or 3 years, whatever's earliest. But if you are a new grad professional student, it will no longer be available. That is huge, Greg. I mean, there are 3.2 million graduate professional students out there. 1 out of every 6 use Grad Plus. Why so many? And I would sum it up quickly by saying there's really no underwriting tied to Grad Plus. There's some knockouts, right? But the federal government is not looking at income. They're not looking at employment. They're not looking at DTI. They're basically saying, hey, if there's not a serious blemish, if there's not like a bankruptcy, a foreclosure, if there's not a high balance, seriously delinquent or defaulted loan or line, we're going to make you that Grad Plus loan. So it's very easy to be able to get this Grad Plus loan. And remember, they could borrow up to the full cost of attendance less aid. So that is a big deal, that now you have a lot of grad professional students that are starting their programs this fall are scrambling because that Grad Plus loan isn't there. So that's the big change. Now, just to put a few more numbers on this, Greg. Grad Plus does about $14 billion a year. 14 billion. So the federal government disperses out 14 billion a year. Plus does about 12 billion. So $26 billion is between Plus and Grad Plus. If you look at just private student lending for context, 13 billion. So these two programs double private student loans, right? And that's including the SoFis, the Sallie Mae's, all of the credit unions, banks, fintechs alike. You can see how big of a deal this is.
Yeah, that's a great explanation. And we were talking a little bit before we jumped on. I've got a son that's going to college, and I've received a lot of information on a lot of these things. But it's a lot to parse through. And for you to be able to explain how that law is going to affect a lot of these things and just the numbers that you shared
Big
is
numbers.
really, really helpful. You know, so why is this of particular importance to credit unions?
Yeah. Um, well, it's I would say there's really two big needs that this impacts. Um, First need, consumer need. So we kind of talked about the consumer need, right? Consumer need is, you got 3.2 million grad students, one out of every six uses a grad plus loan. That's being phased out. It's not going to be available for new grad professional students. They're scrambling. There's a big need there. There's also, let's not forget about the parent cap on the plus loan. There's going to be a need there. So there's definitely a consumer need, right? For sure. The other one that I'm kind of excited to talk about is a credit union need, right? So the credit union need and a universal need out there today that you've heard about, I've heard about, I read about it, I hear about it from talking to credit union leaders, every week, and it's the average credit union member age of 53, right? Everyone's trying to figure out, how do I get younger, right? I mean, how do I get younger? Well, guess what? This law creates a incredible opportunity, right? Graduate professional students, you're looking at 25, 27-year-olds, highly ambitious, financially engaged, right? They don't have a PFI, a preferred financial institution yet. They're still kind of trying to figure that out. And they have a need now. They're like, hey, I need to find affordable financing to help pay for my work to become a podiatrist, right? This is a terrific opportunity for credit unions to jump in and help them. And in helping them, guess what? They put a profitable loan on their balance sheet, right? Strong ROA. But more importantly, they are welcoming a new member that could be a highly productive member for the next 40 years, right? I mean, who wouldn't want, a new dentist or a psychologist or, a doctor, right? As new members. So that is why this is so important for credit unions to take advantage of. I mean, it's a great opportunity right now.
That's a tremendous way to frame it and to look at it. And as you said, credit unions are always looking for ways to engage with the younger audience and track new members in that space. So the big question is then, how can credit unions best take advantage of this opportunity?
Yeah. Well, first, the time to take advantage of the opportunity is right now. It's not next year, it's right now. I mean, the law is taking effect July 1st. So this fall academic year is a big, big time, right? I mean, this is when people are really out there searching. So the time is now. I would say that those credit unions that take advantage of this opportunity now are going to be in a fundamentally different place than those that don't a year from now. So action is needed now. Two populations that I would speak to. The first population is for credit unions that are not currently providing a private student loan on their balance sheet. And that's the vast majority, Greg. So that's probably, 84, 85% of credit unions out there are not currently offering a private student loan on their balance sheet, right? So for that population, I would say, hey, um, this is a great time to lean on a QSO, right? So I absolutely agree that student lending is not like a big, huge loan product like your auto lending or your commercial lending or your mortgage lending. But I will say it's a highly specialized but niche product, right? It has operational demands. It has, compliance requirements. It has the school certification process. I mean, it's a unique animal, but this is where you would want to lean on a QSO, right? I mean, this is what QSOs are built for, is to handle these highly specialized niche products. So if you're not currently in the business of private student lending, lean on a QSO. I mean, I represent one, Student Choice, but there's others out there, right? But lean on a QSO to get you in the space. A QSO can get you up and running in a couple months. You can still take advantage of the very back end of this peak season. Now, for the other population that currently is offering private student loans, you need to get on with a graduate and a professional loan product, right? And a parent loan product. So uh, many do not have a graduate or professional loan. And the reason why is there really wasn't a big, huge business in grad professional. And that's because universities really pushed the grad plus. And I get it. The grad plus, the federal loan was the easy button, right? We talked about how accessible it was. So it was really easy. So if you were a university and you had a student coming in saying, "Oh, geez, I don't have quite enough to afford this program," uh, the vast majority of the times they would just say, "Well, hey, Grad Plus loan's great," right? Now that's changing because Grad Plus is moving away. Now universities, they're out there looking for affordable private student loan solutions, and credit unions can be there to help. So if you're in this business already, you need to get up on a graduate and professional loan. A parent loan, the plus loan, is not a great loan anyway. I mean, this past year it had an 8.94% fixed rate, Greg, with a 4.23% origination fee. That's not super, right? Credit unions, the ones that we're providing, I mean, we don't have any origination fee. And I know that credit unions can get, 100, 200 basis points underneath that fixed rate and still be profitable. So you definitely need to get the plus loan up and running and a grad and professional loan. Lean on a QSO if you're not in this business. But right now, I guess I would say is this is a great opportunity, Greg. I mean, this law has really made some sweeping changes. It doesn't happen that often. And what also doesn't happen is this really presents a very unique opportunity for credit unions to take advantage of. So we want to try to help as many as we can.
That's really enlightening, great information. Jim, thank you for sharing all of that with us. And it's really been a pleasure to connect with you and see you again. I,
Yeah.
I appreciate you taking the time to join me.
Hey, thank you. It was fun. It was fun.
Awesome. Awesome. And thank you to all who tuned in for this 3 questions video interview. We'll see you next time.